December, everyone knows, is a strong month seasonally, but the strength in December is concentrated into the last half of the month. So right now, we're in a little seasonal pause that's very normal. It's a time to consolidate and digest the gains that we saw in late November. November has pretty much the same pattern. It's sideways for the first half of the month, and then the big gains come in late in the month. We're doing it again now in December, and everything is tracking very well according to that seasonal pattern, so I expect it to continue working. Look for a bottom around the 15th of the month, and then a nice uptrend into the end of the year.
So bull market not done, in other words?
Not done, not due to be done until probably March of 2018. It'll be a time to trade and protect assets in the middle of 2018, but not right now. Right now is the time to ride the uptrend.
We have two other charts. It's a heavy Bitcoin show today. If people are unhappy with that, I'm sorry about that. But you have sent us a chart of Bitcoin versus the Dow Jones Industrial Average. Wow, they sit right on top of each other. And then you've also sent us Bitcoin mapped against the 10-year yield of China. Why? Why should I care about these two charts? What are they telling us?
Well, Bitcoin has, of course, had an impressive run. It's gone up tenfold since the beginning of the year, but it hasn't been in a straight line. There has been texture to it. And that texture of Bitcoin's run matches the texture of the Dow. So the point is that if you're trading Bitcoin, you're really trading the Dow with a leverage factor of about 50, or a beta of 50. We get worried about 2 and 3 times leveraged ETFs. You got Bitcoin that's about a 50 times leverage on whatever the stock market is doing. So as long as you know that's the game you're playing, and you're playing with your gambling money, not your investing money, that's fine, have a good time. China's relationship is a little bit more important, because as Chinese yields go up, that's a sign that Chinese debt investors are less confident in that debt, and they turn to Bitcoin in the same time. So as Chinese yields go up, Bitcoin goes up. As Chinese yields come back down a little bit, Bitcoin comes back down just slightly. And so it's the same game you're playing. It's the vacillation of human emotion that affects all price movements. You're just seeing it more magnified with Bitcoin.